Solana has performed incredibly well in the last weeks. It did better than Bitcoin, better than Ethereum, and that's because some numbers look very, very bullish. Now, I'm stressing here the expression of some numbers because not everything is bullish. We're trying to look at the positive as well as the negatives on this channel. We're trying to figure out what objectively is the right move for Solana right now. Because while the current momentum is very, very bullish, the question is, what's behind all of that? How sustainable is it? Does it make sense to still allocate towards Solana? Does it make sense to take some profit? Let's have a look at the different data points. Now, here's what I mean by the outperformance. This is Solana dominance. So this looks at all of crypto, the market cap of all cryptocurrencies, and it puts Solana's market cap in relation to all of crypto. So Solana was able to outperform the rest of the crypto market by 42% since the 22nd of June of this year. So roughly within the span of 3 months. Now here's some data that might raise some eyebrows. This chart shows the weekly Solana transaction fee breakdown. This tends to go up when there's a lot of people using Solana. That's when it becomes more expensive to use the chain. Gas fees go up. And once activity slows down, the fees also come down. So there seems to be actually less usage now compared to the last quarter of last year. Yet we are seeing the price outperforming. What's going on? Have a look at the Solana decentralized exchange traders. How many traders are there currently? Let's have a look at the single day traders. Let's compare this with the ongoing traders. Yes, Solana as an ecosystem is somewhat sticky. We tend to see a growing investor base, but there had been a massive run, which then subsequently deflated, and where we haven't yet seen the turnaround. Check out the number of transactions on Solana. That's not only for the last 1.5 years, roughly. It tends to slightly go up, but really a lot of this is also arbitrage transactions, and as we've seen, the number of traders tends to rather shrink. The numbers don't seem to add up, because when we have a look at the trading volume, when we look at how much trading happened in the last 24 hours, the number for Solana is actually very, very high. Check this out. The DEX trading volume in the last 24 hours was 8 billion with a B dollars. Compare this with the Binance Smart Chain. Here we only had 1.8 billion. Or with the Base Chain, 1.6 billion. Or with Ethereum, 1.8 billion. A lot of those 8 billion transaction volume are due to the Pump Fun ecosystem. So that's the Memecoin launchpad on Solana. 5.8 of the 8 billion is just Pump Swap. And Pump Swap is growing. This is the total value locked of the ecosystem. Quite constant growth, $324 million of TVL right now. And the Pump token itself initially went through a crisis because the tokenomics were harshly rejected by the community. But then a buyback program was started. And with the buyback program, all the fees that Pump.fun generates get used to buy back the Pump token. This is how the market cap of Pump was able to recover again. But this video is not about Pump.fun. This video is about Solana. Pump.fun is a large fraction of Solana now, but really, let's have a look at the Solana chain itself. We see a very similar development here, right? This is the total value locked of the Solana chain. We have the DeFi summer that peaked in November of 2021, then the subsequent collapse, which was initiated by the Terra Luna protocol, the UST collapse, and then also accelerated further by FTX going belly up, Three Arrows Capital, you name it. And then came the recovery. And now we are close to an all-time high in total value locked on Solana. But have a look at the TVL measured in SOL. That seems to have stopped growing in the last 5 months. So all of that TVL growth that we've seen recently is just the SOL price going up. It's not decentralized finance getting used more. Have a look at the number of active addresses over time. Again, another statistic that raises eyebrows. This grew massively with the Pump.fun ecosystem, and while there is a lot of trading volume on Pump.swap now, the number of active addresses on the Solana chain is still going down. So this then poses the question, how much of those 5.8 billion of trading volume is really organic? It seems like a lot of this is wash trading. It seems like a lot of this is market manipulation. And while the market manipulation creates fees and the fees create purchases of the Pump token, the question is really, how sustainable is that development? By the way, I'm covering videos on Solana regularly on this channel over here, so feel free to subscribe. I believe that price discovery is always a mix of two factors. We've got the fundamentals, we've got the news, we've got the treasury companies and the ETFs, but we've also got the market psychology. We're looking at historical trading ranges, and if enough market participants think that an asset at a particular point in time is very cheap, then there will be less selling pressure and there will be more purchases. And because of that, that becomes a self-fulfilling prophecy. The same works for low prices, but it also works for high prices, just the other way around. This is again the Solana dominance, and we already looked at this recent rally. But when we zoom out a little bit, there's really a somewhat constant trading range that was established 2 years ago. The Solana dominance tends to trade somewhere between 2.2 and 3.8%. And I go so far to say that in case we do hit the 3.6, 3.8% dominance mark again, that very likely purchases of SOL will slow down again. People are going to take some profit one more time. This effect happens all the time, and it happens across various cryptocurrencies. Have a look at the Ethereum dominance, for example. This is a very long-term chart, and we anticipated this bounce here that happened at the middle of April of this year. Just have a look at the videos that were published on Ethereum at the time. Most people were super bearish. We bought Ethereum instead. And yes, there are of course fundamental reasons for the bounce. There are the Ethereum treasury companies, there's the purchases through the ETFs, but still, those historical turnaround points, they are potential profit-taking opportunities. And when we are historically low, people buy. When we are historically high, it's much harder to rally any further. It's much harder to outperform the rest of crypto. We've seen something similar for the Bitcoin dominance, right? How much of all of crypto is in BTC? This tends to peak at around 72, 73%. When this crashes, we tend to see altcoin season. And it tends to bottom at around 38%. So this is when Bitcoin is very cheap. And so that's why I respect this resistance so much. I'm not saying that Solana has to come crashing down right now. People are still quite excited about the pump token going up. People are still quite excited about all of that trading volume. But then at some point, people might realize how this is not 100% organic. And people are likely going to ask questions once we are comparatively high in SOL again, relative to the rest of crypto, of course. I'm not discussing the US dollar price at all. I'm just talking about relative performances, because in the end, nobody knows where the US dollar price is going. If Bitcoin suddenly doubles, then Solana can easily double as well. It won't change much in the dominance though, and that's always the question. Does it make sense to hold a particular cryptocurrency over another one? We can also refine this view. So this is now the Solana market cap relative to the Bitcoin market cap. And there are some turnaround points, and we are in a somewhat tighter range, and the potential outperformance of SOL is only 20% from here. Here's Solana relative to Ethereum. So over time, Solana is taking more market share from ETH. But again, we are rather at the higher end of the trading range. There is still potential for quite some outperformance. But the question is, will this be Solana performing that well, or will this rather be a potential sell-off of Ethereum? Because we already talked about the Ethereum dominance potentially turning around here, right? We have seen how the 14% turnaround point got respected several times in the past. And we have just again bounced off that resistance. Now, there's a potential source of demand for Solana that's very counterintuitive. Some people that are extremely bearish on the ecosystem might actually end up buying Solana. And that's because of relative valuation trades. So have a look at the perpetual futures market. Most of the time, Solana has a positive funding rate, so it costs money to bet on rising prices of Solana. And just have a look at the open interest over time. It's now extremely high. So there's now 16 billion worth of bets on the Solana price. And there is positive correlation between the spot price and open interest. When there's more open interest, the spot price tends to be high. When there's less open interest, the spot price tends to be low. And we are currently very high in open interest. If that was to go down, then the spot price would come with it. But really, some people might buy Solana just as a hedge to at the same time bet on falling prices of other tokens. For example, the Trump token tends to have very high token inflation. It tends to perform really, really poorly. And so there's an opportunity to go long Solana and short the Trump token long term and make money this way with comparatively little volatility. So in that form, we're not necessarily that bullish on Solana. Solana itself might actually underperform the rest of the market, but we are more bullish on Solana relative to the Trump token, and we're just making money with the delta. And this is where some of that open interest could come from. This could be more or less long-term capital that's in the market, simply to take advantage of the arbitrage opportunities, because there's simply so many tokens on Solana that tend to perform poorly long-term. I've got the impression that currently the momentum around Solana is still bullish. We could see another 10-20% outperformance versus the rest of crypto. But once we hit the 3.6-3.8% dominance mark, I think it's time to reallocate again, potentially to Bitcoin, maybe potentially to something entirely different. The current growth is not yet natural. Maybe the gamble is that when there are more transactions, that this will attract new investors and new active wallets. Right now, we do not see that yet. The pump token gets artificially inflated through the buyback program. The trading volume gets artificially inflated through wash trading. And the question is how much longer this will continue. Probably we will see more people raising questions once we are closer to the upper end of the dominance trading range again. Now here's something I want you to avoid. Please do not follow people that tell you that there's the next 100x cryptocurrency where you're getting rich quick. Because you might have read about the statistic that 99.6% of pump.fun traders, so traders of smaller meme coins, did not realize a profit over just $10,000. The vast majority of people lose. The winners might be among those influencers, the winners might be among the insiders, and the rest is simply burning their money. And so because of that capital concentration process, because more and more people lose their money, ecosystems like pump.fun tend to shrink when there's no new marketing. And so what's the solution here? Because we want to make money over time, right? What's actually realistic if we can't make our 100x? There is a simple conservative solution. It's just dollar cost averaging. It's buying $1,000, for example, every month into something like Bitcoin. So do this for longer than a cycle, so for more than 4 years, in this example 6 years, then the performance looks like this. So had you dollar cost average into the S&P 500 or into gold, you have gotten this performance, but by buying into Bitcoin, you're getting this performance here. Now the time horizon matters here, right? Because there are bear markets. We include here a bear market where Bitcoin went from almost 70K all the way down to 16K. So at that point, the performance of the S&P 500 and gold and Bitcoin were very similar. But if the time horizon is long enough, then just within 6 years and just $1,000 per month, a comfortable nest egg of 360K can be built. It's not sexy, it takes longer, it takes effort, it takes contributions. It's not getting rich quick, but it's getting rich consistently. Now, I'm a fan of beating this, of course, because the crypto market is still very inefficient. But it's not inefficient in the way how you might expect. I am dollar cost averaging into my trading portfolio as well. This is my active trading portfolio measured in BTC. And my plan is to get to 8 Bitcoin within the next 2 years. Now, I didn't just buy Bitcoin with my trading portfolio. I actually did do active trading that did outperform buying and holding. I got this alpha here. So had I not dollar cost averaged, if I just paid into the trading portfolio once, I would have roughly doubled the amount within 48 years. So because I didn't just buy into Bitcoin, but I did do active trading, I'm now close to 5 Bitcoin and not just close to 2.5 Bitcoin. So what's more important? Is it the trading? Is it the regular contribution? The answer is both is important. At the beginning, the regular contribution is more important. At the end, generating the alpha is becoming more important, right? Because once this is at 3x, not just at 2x, then 2/3 of the Bitcoin in the portfolio is just due to alpha and is not due to dollar cost averaging. So both is important. Contributing is more important at the beginning. Trying to outtrade everything when the capital base is still small is not the smartest idea. Again, you've got a very high likelihood of losing it all. And so I'm actually doing the exact opposite of what most other people are doing. Most others try to find the next best altcoins. They have maybe a diversified altcoin portfolio, 10, 20 altcoins, and they try to beat Bitcoin that way. But more often than not, this fails. If you listen to people like this, how ApeCoin will be the next 100x investment, this video was published 8 months ago, then you would have underperformed Bitcoin by 44% since then. Now, this is not just in the last 8 months. Have a look at what ApeCoin did prior to that. it just underperformed Bitcoin extremely consistently. And so that's how everybody gets wrecked. That's how the majority of people lose. Most people buy things that get recommended by influencers, and very often those influencers get paid by the different crypto projects to do that marketing. I, by the way, never take any money from any crypto project ever. The only money that I take is from the premium members that support this channel here. But more of that in a second. Here's the reason why Apecoin did so poorly. The supply increased over time massively, and the early insiders and the team, etc., they get token unlocks over time and they dump those unlocks on the market, which makes sense when your token performs like this relative to Bitcoin. So this as well is a self-fulfilling prophecy. If most people expect a token to do worse than BTC, then the selling pressure will just continue. And so my approach is to just flip this whole thing around. So instead of trying to find the best altcoins and buying them and having a diversified portfolio of altcoins, I'm just betting on falling prices of altcoins relative to Bitcoin. So I go long Bitcoin, I bet on rising prices of Bitcoin, and I go short the altcoins that are extremely poor in long-term performance. So instead of this chart, I've got the performance of this chart here. So there's now Bitcoin relative to Apecoin. And what we see here in white, that's just the Bitcoin price. As in, Bitcoin does have its drops, but relatively speaking, since Apecoin is so inflationary, it tends to do so much worse. And so over time, it tends to just very constantly outperform just plain old holding Bitcoin. So there's a better strategy to just buying and holding Bitcoin. There's a better strategy to just dollar cost averaging into Bitcoin. And it's not finding the next 100x altcoin. It's betting on falling altcoins because the insiders are cashing out constantly. That's actually how we can beat the market. And that's what I'm doing for the last 4 years. And so I want to share this strategy, of course. It's not as straightforward as just buying an altcoin. We do need to use decentralized finance applications. We do need to do some risk management here. But long term, again, it's worth it. I have made many tutorial videos on the topic, but in the end, you only need 2 videos, 2 very important videos just to copy trade what I do. So that's this video over here, using perpetual futures to bet on relative valuations, and this video over here, risk management with relative valuation bets. Those 2 videos in total amount to roughly 1 hour of content. After you've consumed this content, you can do bets like this. Now, many altcoins are inflationary, and so there's many such opportunities. I also have one favorite trade where the outperformance is very, very constant, where the volatility is very low. I will share that favorite trade once you join. So after you've watched those 2 videos and you've joined the community, I will share my favorite trade. And if that favorite trade does not make money after 1 month of holding, then I will refund the premium membership fee for you, no questions asked. So it's currently $125 per month, and if you don't make money with that trade in that month, you'll just get that money back. So you're not really risking that money, and you can watch all the tutorials in premium, not just the 2 that were mentioned here. So feel free to explore premium without any risk. A link to the website should appear directly here on the screen. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.